All right, what's up, guys? So I know I haven't been posting for a while, but I'm back and I'm just going to use this channel as just a documentation of uh, me building out my portfolio and just the journey that I've been on and where I'm going, I guess. So, I mean, if you find it interesting, watch along, but really the point is just to kind of show you my journey and maybe you can learn from it and you can see things I'm doing. Maybe you can do them as well. And I think this video, just to get back into it, I'm just going to start with just a general update, how I've been doing, the balances of both my portfolios, and we'll go from there. All right, so to start off, my Robinhood account, I've been depositing into it regularly. I'm at about almost 25K now, which is very good. I was back, if you look previously, the last video I left off of, I think I was around 11. So I've doubled my portfolio during a pandemic. Part of that was from just constantly buying during the dip here. I mean, I knew the stock market was going to go back up, and I just continued to buy into VTI, which is Vanguard's total stock market index, right? And I like VTI better than VOO, which is the S&P 500, because you get more small cap stocks and less growth stocks, right? The S&P 500 is very centered towards tech and growth, and tech I think is like 30% of the S&P 500 at least. Not the case with VTI. VTI has a lot of smaller cap stocks, has a lot of value stocks, has a lot of, it has the same dividend. It has roughly the same amount of growth, about 8 to 10% per year. But I just feel like it gives me a little bit more exposure because it's the entire stock market, not just the top 500 companies. So I've transitioned and I've been buying into VTI more recently. And I have been selling my shares actually um, of VOO, which is the S&P 500, the lowest fee index fund for S&P 500. Vanguard has a great suite of index funds, so that's the only index fund that I use. The only kind of index manager that I use is Vanguard. So I've been selling out of S&P 500 slowly, and I'm selling out slowly because I don't want to pay my income tax on it. I want to pay capital gains tax, and in order to pay capital gains tax, you have to hold it for at least a year. So that's what I'm doing. I'm holding all of the shares for at least a year, and then I'm selling them. That way, it's only a 15% tax rather than whatever it would be for income, which would be like 22 or something for me. So that's what I'm doing there. Slowly transitioning. I plan on making this, my biggest holding by far. And then I have like VNQ, which is the real estate fund, some things like that. For the most part, it's pretty much remained the same. I bought a little bit more into some REITs, but I've been trying to keep this, relatively constant and just kind of an experiment showing you what investing into just VCI, just the entire market, what that can do for your returns. And so as you can see, I'm up like $3,500 right now, and that's mostly just from investing into the total stock market. Nothing fancy there. That's pretty much all it is. If you guys have specific questions, I would really like to answer them actually. And if y'all have ideas for content for new videos, like I would love that. Um, but right now, it's pretty much just your basic, I'm just investing into the index funds and that's all I'm doing. And this is how your money can grow. Um, One other slight thing that I'm doing that I was not doing in at the end of when I last posted a couple months ago is I'm actually doing the wheel strategy. If y'all don't know what that is, don't worry, I have a video coming out on that shortly. But the wheel strategy is basically an option strategy where the goal is to collect premium and not buy options, but sell options. So I have been running the wheel strategy, uh, two, I guess, wheels, I guess, if you want to call them that, on XLF. So right now I have 100 shares of XLF and I've been selling covered calls on them. So I've, gained $200 here, but that's not from selling it. That's just from holding it. It just went up in value recently because of the vaccine being released or being announced. And then I also have cash and collateral. Okay. Um, I also have cash that Robinhood is holding as collateral, and that's part of my buying power here. I'm trying to find it for y'all. Here it is. So here's my options collateral. That's because I sold a put on XLF with a strike price of $26 for, I think it was about $8 a premium just for 1 week though, right? And I do this on a weekly basis. Here's the history. So here you go. I sold a put for $7. Um, Let me see if I can go into I can't go into the history anymore, but I also sold a call for, here it is. Geez. All right, my bad, guys. All right, so I also sold a call at 27 and a half for $22, and I sold a put for $7. So just this week, I made $29 with my roughly $5,000 that I've been playing around with this option strategy. And so far, guys, I'm loving it. Okay. And in Robinhood, what's really cool actually is that cash that's being held as collateral here actually still earns me interest through Robinhood's, cash management program or whatever, the deposit sweep. So this is not just idle money, it's I sold a put for it, and I'm also making 0.3% interest, I think, just because interest rates are so low, but I'm also earning interest on this cash. So it's really like you can earn incomes in really four different ways. The first way, right, is you can sell a cash covered put, okay? And you earn your premium on that. Then when you sold a cash covered put, you're earning interest on your collateral, okay? Then you get assigned and you hold the shares, and hopefully the shares go up in value. And so you sell a covered call above where your strike that you got assigned with the puts, which is more premium. So that's the third income way. And then the fourth income stream, I guess, is when the shares get assigned away from you after they go up in value past your call strike price. So you're selling the shares for a profit. So it's really like a quad income strategy. And guys, if you haven't learned yet, you know, cash flow is king. Okay. Yes, market appreciation is nice, but cash flow enables you to compound your money faster. Okay. Yeah, 10% a year, blah, blah, blah. But when you can, for the S&P, the market appreciation, that's great. But when you can earn more dollars, actual physical dollars, and then invest those dollars back into the market, that is really how you compound your wealth. Okay. And the majority of the S&P's growth is actually from its dividend, which is pretty interesting. I think it's about 60% of its growth is actually from its dividend, and only the other 40% is from actual capital gains. So it's actually pretty cool, and that's the strategy I'm doing. Look out for a video. And guys, I plan on updating y'all at least every other week on my portfolio and what I've been up to, and all the options that I've been selling on XLF. Here, I'll just show y'all the history on it real fast, and then we'll move on. Okay, so let me just show y'all all the history. Okay, so see, sold a call here, sold a put here. I actually got assigned with this put, and so I sold at a profit of like $18 or something. But I didn't want to have 200 shares of XLF basically, so I just sold at a profit there. Sold a call on the 100 shares that I have, and it just keeps going, and this is just cash that I've been earning every week for doing literally nothing. So there's that. Okay, so let's take a look at M1 Finance. Okay, so this is up to, right? And this is my dividend experiment. Okay, and guys, at the end of the day, these are experiments, but it's also my life, and I'm doing this, and we're just gonna see how it works out. If it all blows up, well, it was fun while it lasted. So I've been putting, I've been eating beans and rice, and I've been putting all of my money that I've earned into these two investment accounts, and it's paying off finally. And so I'll leave a link in the description, and it'll show you all of these pies, individually and what I'm holding in each of them, right? So this is my real estate pie here, my winners, my losers, I'm just holding on to all of them right now. So it'll show you everything, and I'll be sure to leave that in the description. So if y'all are really curious on what I'm holding, which I always am on other people, right? I'm always curious, like, hey, what you're having. So what you're holding. So, that'll be in the description. And if y'all have any questions on this, it's pretty simple. It's a dividend income strategy. There's other videos on it. I have previous videos on it. And it's all about this income stream here. Activity type, I guess, right? Yeah, dividends. Um, Here we go. So it's all about this income stream here. And yeah, it looks like small numbers now, but imagine having $100,000, $200,000 in here. All of these would be multiplied by 10, 20. So um, pretty simple, but this is my M1 account, okay? And now I want to show y'all my progress, what y'all missed or what I made y'all miss, if anyone actually cares. And so here is, I'm still tracking. This is M1, and so here's the dividend that I've earned. Here's my dividend graph, and it's trending upward, which is excellent. October was a low month, but it seems like October is always a low month. Here was extremely low, and I know in Robinhood it was low too. And here's the portfolio value over time. And I mean, it's pretty simple. All you have to do is track this month and track this month's dividend and just keep going from there. And what you use to track is your account statements, okay? When they come out with the account statements on like the third or fourth of the month, okay, for the previous month, you go into your account statement document and you look at your balance and your earned dividends, and that's all you do. You just track them right here. Pretty simple. So here's Robinhood. A little bit more complicated, but not really. You just have an interest payment too. And so this is the interest I'm earning on that cash collateral and the buying power that I have. As you can see, I was having a lot of interest here for a little bit, and then the Fed cut rates. And so, it is what it is. Here is the dividend per month, also trending upwards exponentially, actually. So I put a line best fit, and it's an exponential line. Same with the portfolio value, which has me very excited. It's also an exponential line. So, in March of 2021, I hope to have, about 35,000 or so in Robinhood. And hopefully I can stay on this trend line. We'll see. I'm gonna keep putting everything I can into it. All right, so the last new tab that y'all haven't seen before is actually this one, which is XLF options. Okay, so this is my strategy, the option strategy that I just went over, and this is how I record my basically profit and loss, right? But I haven't lost any, which is perfect for my risk tolerance. So here I've been doing it for 3 months, and I'm very excited about it. So I first started here. Okay, this one didn't come into play until I had enough cash saved up to where I could put another 2,500 into the strategy. But basically, I sold a put for $15 and I got assigned that week. Yeah, stock went down. I got assigned. So I got assigned at 25.50, which is what that number is. Okay, that was my price for each share of XLF. And then I started selling calls. Okay, and I sold my first call for $18. Then I sold for $14. And you have to sell a call with a strike at 25.50 or greater. Otherwise, you're going to lose money if you get it assigned away from you. If you get it called away from you. These 2 weeks, it was just so low that I couldn't sell anything. So that's the risk with this strategy is if it drops like to $23, it's not going to be worth it to sell a call. Your order is not going to get filled. And you're just going to look like you're just going to be sitting on XLF. You're going to be sitting on an option that's never going to get filled. So just no point in even doing it here. And then it started to rise back up, and I was able to get $4 this week. And then I was really close to the strike. I was able to get $27. Went back down, went back up, and and here we are today. Okay. At about the beginning of November, I added another $2,500 to this so I could have two wheels going. So this is my first wheel that's been going for a while now, doing great. This is my second wheel. So here I got $11 for selling a put, and I actually got assigned again. Okay, the same week I got assigned, just like I did on my other one. And I was like, screw this. I do not want 200 shares of XLF. So my cost basis was $24, so you can see how low the actual share price was compared to this one. So like the share price was $24, while I had a share price of $25.50, so I was actually down 150, but it was unrealized, okay, because I didn't sell. Now it's up. Okay, that's how stocks work, guys. You can't sell just because you're at a loss doesn't mean you should sell. Okay, so I then sold because the stock price went up, and I sold it for I think an $18 gain here. And then I also sold a put for like $8. So that gives you the $26 that I made that week. And then this past week I sold $7 I sold a put for $7. And you have your monthly totals here. And you know what, guys? If you actually do this and annualize your return on this investment, okay, with $2,500 here, if you actually annualize this return, it comes out to about a 20% to 22% return per year. And that's realized gains. That's cash coming in. That's just your premium here. You make 20% on that. When I found that out, I was like, dang, I'm gonna start putting some money into this strategy. And so I'm gonna be cautious, but in the future, once my portfolio reaches a value of 30 or 40,000, I'm gonna add another wheel, and I'm gonna have three wheels running. And I'm gonna run them on XLF as I've been doing, because is a XLF is a ETF. It's actually a bank ETF. It's the financial select sector, okay? And it has Berkshire, it has Bank of America, and it has a nice hefty dividend of like 3% or something like that. I don't see it on here, but it's like, man, Robinhood, can never tell where anything is. But yeah, there's like a dividend of like 3 or 4%. And oh, here it is. Okay, 2.23%. So not super high, but it's definitely better than nothing. And so if you do have shares, like I have 100 shares, I actually recently got a dividend for like $13. So that's just another part of the income that I didn't even account for when calculating the annualized return. So that's it for this video. I will come out with an option strategy, how I'm doing my specific. I know there's a bunch of wheel strategy videos out there, but I'm going to make one in a couple weeks, specifically outlining how I'm doing it. And I will go through how I do it with y'all. I will go through actually selling the call and selling the put, and showing y'all how it all works. So stay tuned. Look forward to that. And if y'all have any questions, man, just leave them down below. I will definitely get back to you. I've really thought about it, and I really want to continue documenting my finance journey. And I'm also going to be working on editing and trying to improve the quality of these videos, just so it's a little easier to watch, So I'll see you guys in the next one. Look out for the wheel strategy here in a couple weeks. So see you guys later.